bond rebound as government signals market re-engagement. And also, BP announces largest oil and gas discovery in 25 years off Brazil's coast. Ghana's government bond market showed strong signs of recovery in the first half of 2025, with yields falling sharply across the curve as investor confidence rebuilt on the back of easing inflation, improving macroeconomic indicators, and expectations of policy clarity. Data from the Bank of Ghana's July 2025 summary of economic and financial data revealed significant yield compression, particularly at the short end of the curve. The 4-year bond yield dropped by 686 basis points from 26.22% in January to 19.36% in June. Yields on medium and long-term bonds also declined, with the 15-year bond falling from 26.71% to 20.74% and the 10-year benchmark bond sliding to 20.08% from 26.36%. And this broad-based trend follows the turbulence caused by the 2023 Domestic Debt Exchange Program (DDEP), which restructured the local debt and initially led to heightened volatility. However, the market has been stabilized, aided by enhanced fiscal messaging, a more predictable exchange rate environment, and growing optimism around sovereign debt sustainability. Investor sentiment has also been buoyed by discussions of a potential government bond buyback. Republic Investment CEO Madeleine Nette noted that ongoing talks about engaging new book runners suggest action could begin by the third quarter. She emphasized that such a move would restore alignment for investors whose portfolios were restructured into long-dated bonds, enhancing confidence and market participation. Analysts further point to narrowing spreads between short and long-term bonds, such as the 138 gap between the 4-year and 15-year bonds in June, down from nearly 500 a year earlier, as a sign of market normalization. Despite lingering caution among some traders who cite limited investment alternatives as a possible driver of demand, the current environment has lowered government borrowing costs and created some fiscal space. This could pave the way for corporate bond activity and increased private sector credit growth. The recovery marks a sharp contrast with the post-DDEP period, when uncertainty drove erratic price movement. With the government eyeing a return to capital market, the bond rally could signal a new phase of fiscal and financial stabilization. Now, the Minister of Finance, Dr. Kesalato Forson, has announced a significant increase in Ghana's cocoa producer price, raising it from $3,100 to $5,040 per ton, representing a 62.58% increase in dollar terms. In Ghana cedi terms, the price has been adjusted from 3,100 Ghana cedis to 3,228.75 Ghana cedis per 64 kilogram bag, reflecting a 4.1% rise. The minister explained that the increase is part of government commitment to ensure that cocoa farmers receive fair compensation amid rising global market prices and inflationary pressures. The new pricing, he noted, is aimed at improving farmer welfare, boosting rural incomes, and sustaining cocoa production. Dr. Forson made the announcement during a government briefing, stating that the adjustment reaffirms the administration's focus on protecting the livelihoods of farmers while maintaining Ghana's leadership in the global cocoa industry.
To note that the government has, by this decision, increased the producer price significantly by 62.58% in US dollar terms. This increase in the producer price represents 70% of the gross free-on-board value of $7,200 per ton, aligns with the NDC's manifesto and President Mohammed's promise to pay the cocoa farmer 70% of the FOB price. It is significant to note that for the 2024 and 2025 crop season, the previous administration set an FOB value of $4,850 per ton of cocoa and the producer price at $3,100 per ton, representing 63.9% of the FOB price, even though the world market price at the time was much better than today. And for emphasis, between 2024 and 2025, previous administrations set the FOB value at 4,000 Review Committee, PPRC, on cocoa, under my chairmanship, met and agreed on the producer price of cocoa for the 2025-2026 season, which opens on Thursday, 7th August 2025. Subsequently, government is pleased to announce an increase in the producer price of cocoa from $3,100 per ton, $5,040 per ton. I thought you clap for me.
British energy giant BP has announced its biggest oil and gas discovery in over 2 decades, marking a major pivot back toward fossil fuel development amid declining investment in renewables. The discovery was made at the Boomerang Block in the Santos Basin, located approximately 400 kilometers off Brazil's east coast. According to BP, preliminary test indicates the presence of a significant 500-meter column of oil and gas, making it the company's most substantial find since the Sardinas gas field in the Caspian Sea in 1999. Gordon Burrell, BP's executive vice president for production and operations, described the development as an exceptional success and hinted at plans to build a major production hub in the area. The announcement follows BP's February decision to scale back its renewable energy ambitions, redirecting billions in investment toward traditional oil and gas operations to reassure shareholders and capitalize on rising global demand for fossil fuels. The Brazil find adds to a series of recent successful discoveries by BP, including new reserves in the Gulf of Mexico and Egypt, strengthening its upstream portfolio. While BP's strategy to transition into a net zero energy company has faced setbacks, most notably a $5.7 billion loss in 2020 due to the COVID-19 pandemic and a $25 billion write-down from its Russian exit in 2022, the firm is now regaining momentum in the conventional energy space. Following the announcement, BP's share price rose slightly in London trading, reflecting renewed investor confidence in the company's revised direction.